Good morning. I'd like to call the meeting of the Audit Committee to order. Mr. Facili, are there any public speakers?
Well, before I get to that, let me read the safety message. In the event of an emergency, 911 should be called. If an alarm sounds, wait for a public address announcement and follow the instructions. If told to go to another floor or to evacuate the building, leave all unessential items behind and use the stairwell A, just across the main hallway, or stairwell E, down the hall past the elevators. In case of emergency, notify emergency personnel if you need assistance. Automated external defibrillators for use by trained personnel are located in the main hall, just past the elevators. And with that, to answer your question, Mr. Chair, we have 3 public speakers. I'd like to call up the first, Rachel Faust.
Good morning. My name is Rachel Foss. I'm the Senior Research Analyst for reInvent Albany. We advocate for more transparent and accountable state government, including for state authorities like the MTA. We have a special interest in using technology to foster open government and have worked with numerous New York State and New York City agencies to implement open data websites and freedom of information law portals. We have 2 broad comments on the information technology report the Audit Committee is receiving today. First, we hope the MTA and its agencies will continue to strive to use IT, especially low-cost open source FOIL and open data platforms, to foster transparency and accountability at the MTA. We appreciate CEO Chairman Foy's commitment to do that via improved open data and FOIL processes. Second, after looking at the IT contracts and public-facing IT, as well as today's IT report that the committee will receive, we are concerned that the MTA is facing an outsourcing trap. That is, the MTA has outsourced so much of its core IT systems management activity that it lacks the nucleus of in-house talent or product development pipeline to do things on its own or properly scope and RFP IT contracts. A December 2015 bundled procurement approval of 25 IT contracts by the MTA Board noted that the MTA did not have the resources or expertise to support its IT systems, and even contracted out IT project management. That was before 187 positions were permanently eliminated, according to your report today. The consensus of government technology experts is that large government agencies that lack the capacity and internal expertise to do some application development and independently manage core systems are extremely vulnerable to being overcharged for IT services and are often locked into certain vendors. This leads us to 2 questions we think the Audit Committee should ask. 1, how big of an impact is the hiring freeze having on the MTA's IT staff, and is it actually fueling higher IT costs through outsourcing? 2, given the pending reorganization, what can be learned from the Business Service Center IT consolidation? Has the IT consolidation led to the decline of internal capacity and expertise? Are there hidden costs, and does the MTA now have a dependence on major vendors that have leverage over the MTA? We hope you can answer these questions. Thank you for your consideration.
Thank you. And with that, we'll bring up Orrin Getz. Oh. Okay, so with that, we move to our last speaker, Murray Borden.
I'm a little short, so I need this little thing here. You are charged with auditing bridges and tunnels and how they spend their money. This is my bridges and tunnel Easy Pass transponder. I've taken it off my car. I took it off 3 weeks ago. I drove through New Hampshire, Connecticut, Massachusetts, and Maine. Without the Easy Pass transponder, Maine charged me for every time I went through one of their toll booths. This is not necessary anymore. We should stop all use of transponders, and you should remove all of the transponder readers and all of the gantries that we've put up, because you read by plate. When they read by plate, they say, first thing, hey, does he have an Easy Pass account? If the answer is yes, they charge it. Because I've looked at my recent Easy Pass statement, and it says right at the top, account number / plate number. And I've already been charged by plate number on my statement. So you've already taken those steps. Now, as the Audit Committee, it is your responsibility to check that all of those gantries are taken down, because the cameras are little bitty things and they're all over New York anyhow for various reasons. They're all tied together. I know it. You should know it. And save that money. The maintenance and everything else connected with the gantries and Easy Pass readers should be removed, and it's your job as the audit committee to check on that. Thank you very much.
Thank you. Mr. Chairman, this concludes the public speakers.
Okay, thanks. Next we have the approval of the January 22nd minutes. I note that the quorum is not present, but we'll go through the vote anyway and deem them and send them off to the board. May I have a motion and second for approval of the minutes? I'll second. Minutes are approved. Please take us, Mr. Vasili, through the work plan.
Yes, Mr. Chairman, there are no changes to the work plan. The next meeting will be in July, and it will cover several items, including the first quarter 2019 financial statements, the 2018 single audit report, the 2018 management letters, and we will have an MTA OIG presentation.
Okay. Do you have an update for us?
Yes, Mr. Chairman. In the July meeting, I'll provide the committee with a summary of our audit accomplishments for the past 6 months, but let me highlight 3 of them today. As part of the Joint Commuter Railroad Fare Evasion Strategies, we have expanded at management's request and from the railroads our current onboard compliance program to include, among others, increased statistical observations, increased fare evasion observations, particularly during the weekend. Secondly, in accordance with MTA's commitment to the FTA, our Sandy Audit Unit continues to perform audits of ongoing Superstorm Sandy projects at New York City Transit, Metro North, and Long Island Railroad. We coordinate these efforts with the MTA IG's office, and we have utilized consulting contracts with third-party independent integrity monitors to supplement our program. This work will include 2 current task orders for the review of project management controls at the New York City Transit Staten Island Clifton Shop and the Long Island Railroad Long Island City Yard project. And lastly, of audit, we recently audited $13 million of billings for the independent engineering services from the McKissick Group, which resulted in us identifying disallowances of $600,000, of which McKissick has reimbursed the MTA with a check for these audit issues.
Are there any questions? Any questions? Well, I have one. Mr. Vasili, does this disallowance of the auditing the services of one contractor provoke a review of all of our contracting relationships and how they have been billed and managed?
Within internal audit, we have a contract audit group that does just that. We can't do them all, but the larger contracts, we do look at consulting type contracts of this nature, particularly certain dollar amounts for labor rates charged, overhead costs, to make sure they're in line with our contract, and in particular with federal acquisition regulations if federal money is applicable. So to answer your questions, yes, we do. We do a robust program, which I'll report in July. And we have very similar findings in which we recoup millions of dollars back for vendors not being in accordance or compliance with those terms.
Okay, thank you. Next is Noemi Lopez, who is the Deputy Controller, to provide a management review of 2018 MTA consolidated financial statements, including changes in capital net assets, operating revenues, and expenses.
Good morning, members. The presentation that I'm about to present is on page 14 of your Audit Committee workbook. I'm going to present the MTA's consolidated financial statements for the year ended December 31, 2018, which are prepared in conformity with generally accepted accounting principles, using the GASB standards of accounting. There are 5 sections to the financial statements. For 2018, there were 3 new GASBs that the MTA had to implement. only one of the GASB had an impact on the MTA's financial statements, and that was GASB 75 for OPEB. The intent of this GASB was to improve accounting and financial reporting and to record the OPEB on the face of the financial statements. We're going to take a look now at the MTA's consolidated statement of net position as of the year ended December 31, 2018. In total assets and deferred outflows were approximately $84.7 billion. Liabilities and deferred inflows were about $80.7 billion, and net position was approximately $4 billion. In this slide, we'll go through the changes that drove the total assets and deferred outflows. Total assets increased by $3.7 billion, primarily due to an increase in capital assets of $4.4 billion related to an increase in capital investments. This was offset by a small decrease in cash and investments of $750 million. Deferred outflows of resources increased by $673 million, primarily due to deferred outflows for pensions, which was the result, OPEB, which was the result of the implementation of GASB 75. This was then offset by a small decrease in deferred outflows for pension of $647 million, which was due to higher than assumed investment rate returns, which resulted in lower employer contributions. Total liabilities increased by $5 billion. The primary drivers of this increase was long-term debt, which increased by $2 billion due to new borrowings. Net pension liabilities decreased by $1.6 billion due to higher than assumed investment returns. OPEB increased by $3.6 billion due to the implementation of GASB 75. Deferred inflows of resources increased by $608 million, primarily due to deferred inflows for pensions. This was due to the fact that we had higher than assumed investment returns when compared to the actuary assumptions. This shows our change in net position, which decreased $1.3 billion from the prior year. The main drivers of this decrease, is a change in net investment in capital assets, which increased by $1.8 billion, primarily due to an increase of capital assets of $4.4 billion, which was offset by capital-related liabilities of about $2.6 billion. Unrestricted net position decreased by $3.2 billion. This was primarily due to an increase in OPEB liability of $3.6 billion, offset by an net increase of deferred inflows and outflows of $65 million, and a surplus before depreciation and capital grants of about $309 million. From a statement of cash flow perspective, the MTA's cash increased in 2018 by $258 million to $541 million. The main drivers of that were net cash from operating activities, which is basically a net impact of operating revenues and expenses. That changed by $450 million. Net cash from non-capital financing activities increased by $449 million. That's related to tax subsidies that we get from the New York City and New York State. Net cash from capital and related financing activities changed by $236 million. That's mostly due to our borrowings and debt service. And net cash from investing activities increased by $944 million, primarily due to our inflows and outflows for short-term investments like treasury bills and the like. So that brought our MTA cash at $541 million at the end of the year. From a statement of revenues and expenses and changes in that position, our operating deficit was $8.1 billion at the end of 2018, a change of $72 million from the prior year. Subsidies and tax revenues increased by $617 million. Interest expense was a slightly small decrease of $57 million. That brought our deficit before capital grants and appropriations to $2.5 billion. Then we had capital grants and appropriations of $2.3, bringing our net position change to $150 million. Alongside of that, we had a restatement of beginning net position of approximately $1.1 billion, resulting from the implementation of GASB 75, which brings down our net position to $3.9 billion. This schedule more or less compares the financial statements, the audited financial statements, to the financial plan estimates that was presented for the February plan. As you can see, the net operating deficit for the audited financial statements was $8.1 billion when compared to the financial plan of 9.3, slightly better because the financial plan did not account for the implementation of GASB 75. That's mostly the increase there, the change rather. Dedicated taxes and subsidies changed, well, it's not much of a change. It was pretty much even with the financial plan. Debt service shows a difference of 1.1 billion. Presentation only, the difference is presentation and how the financial plan accounts for interest and principal, whereas from a financial statement point of view, we show that on the balance sheet. And then there were conversions of non-cash liability adjustment of 4.2 billion for our financial plan, bringing down the financial plan estimate to 338 million compared to our financial statements of 2.5 billion. And this schedule shows the reconciling items that were the drivers of the difference between the financial plan and the financial statements that were audited. And that concludes my presentation. If there are any questions, please let me know. I'll be happy to answer them.
If there are none, thank you. And next we have Mike Fritz, Deloitte's engagement partner on, please join us at the table, on the MTA audits to present the results of their audit of the 2018 MTA consolidated financial statements and the individual MTA agency financial statements. Mr. Fritz, and please introduce your colleagues and proceed.
I will. Thank you, Mr. Chairman. It's our pleasure to present the audited financial statements to you and our standard communications that we're required to prepare for you as a result of the audit. To my right is Jill Strohmeyer. She is the individual that signed MTA headquarters and a few of the other agencies. And to her right is Chris Hickman, who also performs the audits of Long Island Railroad, the Metro North, and the bus operations. And I will let them conduct the presentation for you this morning.
Okay.
Good morning. In front of you, there is a Deloitte letter with a black cover. I'm going to cover that during our presentation. So we have performed the audits of the consolidated financial statements of the MTA and the New York City Transit Authority, along with the financial statements of FEMTAC, Long Island Railroad, Metro North Railroad, MTA Bus Company, Sertoa, and Triborough Vision Tunnel Authority, as of and for the year ended December 31, 2018. And we expect to issue our reports on or about today after your approval. On page 1 of the presentation, there's an executive summary. At the present time, we are through our documentation of our audit. In a moment, I'll go over a few uncorrected misstatements identified during our audit. There were no material corrected misstatements during our audit. And then we are in a position to evaluate subsequent events as of today prior to the issuance of our reports. At the bottom of page 1, there are a number of standards that will be adopted for Q1 of 2019. At this point in time, I am not aware of any issues that would delay the adoption of such standards. On page 5, it lays out our responsibilities under generally accepted auditing standards and generally accepted government auditing standards, which we also communicated to you back in the fall during our audit plan presentation. On page 6, we go over the significant accounting policies. During 2018, we are not aware of any significant changes in accounting policies with the exception of GASB 75 as it relates to OPEB, which Ms. Lopez mentioned during her presentation. On page 7, it talks about critical accounting policies, practices, and estimates. And during the course of our audit, we did not identify any significant modifications to such policies, practices, or estimates. And in a few moments, I will go over what those key estimates were. On page 8, we have laid out 2 uncorrected misstatements as it relates to TBTA and the New York City Transit Authority. The first one related to TBTA, we identified last year actually, and this is just a carryover effect, an audit adjustment of approximately $2.3 million related to bond issuance cost, which were not expensed in 2017 and instead were expensed in 2018. This uncorrected misstatement is not considered to be material for the purposes of the financial statements. As it relates to the New York City Transit Authority, our audit identified subway cars that were recorded in the general ledger in which assets were disposed of in a prior year. The net book value of such subway cars disposed of in a prior year was approximately $125 million. Management made a correcting entry this year to record that loss on disposal. Once again, the effects of this uncorrected misstatement in a prior year was not deemed material to the financial statements as a whole. There were no material corrected misstatements identified during our audits this year. We had no disagreements with management throughout the year. And we received the full cooperation of the MTA's management during the performance of our audits. At the July meeting, we plan to communicate to you some internal control deficiencies and other matters that we identified during our audit. I will note now that there were no significant deficiencies or material weakness identified during the course of our audits, just what I would consider some enhancements that we noted that could be made to internal control policies and procedures. On pages 9, 10, 11, and 12, we list out some auditors' reports. We call them emphasis of matter paragraphs. The emphasis of matter paragraphs this year relate to the adoption of GASB statement number 75 on OPEB. In our professional judgment, we believe the readers of the financial statements or this adoption of this standard is important enough to highlight to the readers of the financial statements. There are also other matter paragraphs listed in our auditor's report. These other matter paragraphs are required by GASB to highlight required supplementary information related to pension and OPEB and management's discussion and analysis. It's consistent with what you may have seen in the past. On pages 16, 17, and 18, we lay out the critical estimates that we audited during the course of 2018. On page 16, it lays out the pension benefits estimates and some of the key assumptions and that were used in the determination of that liability. During the course of our audit, our teams engage our internal actuarial specialists to review management's experts' report. We also test the underlying census data to ensure that it's complete and accurate. I will point out that most of these assumptions that are listed out on page 16 are consistent with the prior year. On page 17 is the OPEB accounting estimate. This again, this was the result of the adoption of the new standard GASB 75. You will note there the assumptions at the bottom. Well, I guess it doesn't show the comparative, but the discount rate increased this year from last year as a result of this adoption. It was 3.16, I believe, last year, and 3.44% this year. That's probably the biggest change in the underlying assumptions. OPEB is very similar to pension in that we test the underlying census data for completeness and accuracy, and we also involve our internal actuarial specialists. And the last estimate is on page 18, and this relates to the estimated liabilities arising from injuries to persons or your claims and judgments liabilities for workers' compensation, general and auto claims. Once again, as we do with most of your estimates, we involve our internal actuarial specialists to review the assumptions and methods that were used to determine the liability balances at the end of the year. At the very end of this letter are the management representation letters. We're required to share those with you, and these are the letters that we require to be signed by management at the conclusion of the audit prior to the issuance of our reports. And that concludes my presentation. I'd be happy to answer any questions.
Are there any questions on this? Are you concluded with the entire financial statement report?
Yes.
Then I have some questions I'll ask on behalf of the committee. It's a rubric, so nobody falls over in a dead faint. It's a yes or no answer. Are the statements in accordance with all the current accounting principles, regulations, and laws?
Yes.
Are there any changes in accounting principles used in these statements?
Yes. GASB 75 was adopted by the organization in 2018.
Are there any accounting treatments not preferred by the independent auditor?
No.
Were there any aggressive accounting issues?
No.
Had there been any unadjusted material differences between the independent auditor and management?
No.
Were there any further adjustments, estimates, judgment calls, or concerns the audit committee should be made aware of?
No.
Are you in agreement with all material judgments and estimates?
Yes.
Have there been any accounting control issues or material control deficiencies?
No material weaknesses or significant deficiencies. No.
Was all information provided in a timely fashion?
Yes.
Are all of the independent auditor's services in compliance with all mandated guidelines?
Yes.
Is there anything else we should be informed about? Anything else we should discuss?
Not at this time.
Are there any areas of concern with respect to the independent auditor's independence?
No.
Are there any new audit procedures or processes the independent auditor will be using?
With the exception of what we did related to GASB 75, no.
Are there any new critical items or areas the independent auditor will be emphasizing?
In our report, we emphasize once again the adoption of the new standard, but other than that, nothing else.
Okay. Is there any other question? Hearing none, may I have a motion to accept? I'll second. All in favor? Thank you very much. Now we're ready to talk about the investment compliance report. Deloitte will continue to do its presentation, this time on their report on their review of the MTA's compliance with the MTA investment guidelines and New York State's investment guidelines for public authorities. Section 2925 of the Public Authorities Law requires that this report be provided to the State Controller's Office.
So on page 563 of your workbook, you will find a draft of Deloitte's independent auditor's report related to the investment compliance of the MTA. And so essentially what this is saying is that during the course of our audits, we do investment testing work on investment purchases and sales, as well as the investments in your portfolio at the end of 2018. And we did not identify any situations or instances where your investment securities were not in compliance with the state guidelines and laws and regulations and policies.
So that being the case, may I have a motion to accept the investment compliance report? I'll second, and we're all in favor. Thank you. Investment compliance report is accepted. Next, back in the saddle is MTA Chief Compliance Officer Lamont Kearse.
Thank
Brief us
you.
on the agency's compliance with state law regarding the filing of financial interest reports, including any known conflicts of interest.
Thank you very much. It's good to be back, even for this subject. I'm sure everyone loves financial disclosure. So as you can see from the report, which starts on page 564, I provided the audit committee that the MTA had over 6,900 filers this year. We will continue to work with the Joint Commission to identify any of the filers this year who did not file by the May 15th deadline. As of last year, we had over 7,000 filers, and I'm happy to say, as of the date of the report, every single person filed on time. Do you have any questions regarding financial disclosure?
Are there any questions? Ms. Feinberg?
Sure.
That seems like a lot of filers.
There are two criteria by which an employee has to file. Either they make over a certain dollar amount, there's a financial threshold, or they are designated as a policymaker. Policymaker means they are involved with vendors, they are involved with procurement, they have significant influence over finance. So out of an organization of our size, that's really what drives the factor. The cutoff, I believe, is around 98,000 for the financial aspect, but a lot of the people are policymakers because of the involvement they are with procurement and finance.
Okay.
We are going through, just so you know, a process right now with the Joint Commission of looking at all the employees who actually have exemptions because they make over the threshold, but maybe they don't really need to file because they are not doing anything that would really require it. We are going through every job description now by August 1st to see if we can identify any employees who should be exempt who are not currently exempt.
And what member of senior leadership makes the determination that they get an exemption if they apply for it?
Well, actually, the determination is the commission's. We can object to it, and that would be in my role to object, but the commission makes a determination ultimately whether or not they can grant an exemption. I'm sorry, you cannot get an exemption.
I wasn't looking for one, thank you.
Sorry, okay.
Is there anything else? But thanks for asking.
You are.
Please continue. We're talking about ERM update and internal control guidelines.
Okay, great. I'm providing a report on the status of the MTA's ERM program. I'm not going to go through the entire report. It's in your book, but I want to highlight a few things in the executive summary. We are actively working on reviewing all the business processes at the MTA and its agencies with their associated objectives, risks, and controls. In addition, some departments have begun the process of actually testing their internal controls in anticipation of preparing a report this year for this committee. As you can see, we are continuing our role in terms of replacing our current GRC system. Phase 1 is actually scheduled to go live on May 29th of this year. Phase 1 encompasses policy management as well as issue management, and we look forward to going live with the new system on May 29th. We have 6 open material significant deficiencies as determined by the staff. We are working on closing those as quickly as possible. There are representatives from the agencies here today to answer any questions you may have on those open items. Finally, the committee has asked we identify any factors that may impact our ERM program. Those factors are transformation, new initiatives, and of course, as I mentioned before, the GRC migration. Do you have any questions on that?
Anything on enterprise risk management?
We've included the guidelines that the board issued on ERM management. We're not recommending any changes at this time.
Before we continue with your report, I have some questions of management. Now we're at enterprise risk. Are there any new risks that have occurred that have not been discussed with the audit committee?
No.
Are there any changes in risk management policy or procedures?
Not at this time.
Are all risk management policies and procedures up to date and effective And are there any new policies or procedures contemplated?
We will be bringing to this committee revisions to the guidelines I mentioned earlier to comply with COSO's revised internal control risk management framework and some new guidance that was issued this year by COSO. So we will be bringing new changes this year to the board.
By the next meeting, I presume?
I will try to make that happen. Yes, sir.
Thank you. Are you satisfied with internal controls over financial reporting?
Yes, I am.
Are there any significant deficiencies that have not been reported to the audit committee?
All significant deficiencies are included in our internal control certification summary report. So yes, they've all been reported.
Are you comfortable with the adequacy of our cybersecurity controls and procedures?
Yes.
Do we have any new initiatives in cybersecurity?
I think Mr. Moran may be better suited to discuss those, but cybersecurity is a constant, ongoing process. It is perhaps one of the most significant risks this organization faces. So I think a more detailed discussion by Mr. Moran would be more appropriate.
And relative to that, there are reports this morning about technology we are contemplating acquiring that we haven't yet acquired. Not sure the news reports have caught up with the reality yet. But are we looking at our cybersecurity protocols with an eye toward an acquisition like that?
One of the components of the new system that I had mentioned, that's the first phase is going live on May 29th, is an increased concentration on cybersecurity as well as PCI compliance. So yes, we are looking at strengthening those areas, especially as it relates to risk management, yes.
And finally, not to leave Mr. Foran out, are there any new changes in accounting procedures, personnel, or controls?
To that, the only procedures we change are in relation to the new GASB that we implemented.
Okay. Thank you. And there's one final question on funding. It's on page 36 of the committee book. We've received the full $836 million subsidy for the subway action plan. Is that correct?
That is correct.
It says in the book that $508 million of it is in revenues. Is the balance of the receivables at year end, or will it be booked when received?
The subway action plan was broken out into operating and capital. So the 508 was recorded as subsidies. The remainder is currently in the capital side of the world. So you'll see that on the balance sheet.
And it'll be booked when received?
Correct. It has been booked as received.
Okay. Any other questions on this? Okay. Please continue.
As you can see on page 585, we include a certification that the MTA is compliant with the requirements of the New York State Internal Control Act for the period of 2017 through 2018.
Are we ready for the information technology report? Mr. Moran. Acting Chief Information Officer, to provide a briefing on the activities of MTA IT for the past year, including its accomplishments, strategies, and plans for the ensuing year. Please be brief.
Good morning. In an effort to be brief, please jump to slide 3. Since the last IT presentation, one of the major accomplishments MTA IT has accomplished was the cutover of all fare media systems to a new banking partner. This obviously required a high degree of testing prior to implementation. We also completed the implementation of dual-factor authentication at Metro North, Bridges and Tunnels, and now the BSC. Long Island Railroad is next to go, and then New York City Transit. This is critical for the security of all of our employees and their communications. In addition, we moved PeopleSoft to a new hardware platform and established disaster recovery capabilities in Albany. Also, we continue to implement the Windows 10 desktop MTA-wide implementation and the next generation network in support of enterprise asset management as well as other projects. Lastly, we completed a proof of concept of UWB technology, which will allow for tracking of our service delivery assets. For 2019, we are continuing to upgrade our cybersecurity platforms, as well as completing the implementation of two-factor authentication throughout the MTA. We also plan to complete our Windows 10 upgrade project early next year as we continue to roll out next-gen network. In addition, we plan to shortly complete the coupling between the New York City Transit AFC mainframes to ensure there is no downtime to debit credit due to maintenance. And lastly, we are continuing our work on rationalizing our application portfolio, which I will address later in the presentation. For internal controls, MTA IT is using the Critical Information Security Framework. We have tested 44 controls, of which 42 have passed. 2 are under remediation at this time. This year, we are increasing our cycle of testing from annually to quarterly to ensure we comply with the Critical Information Security Framework on a continuous basis. As part of application rationalization, we took a step back and structured the overall program with clear definitions of applications. Based on the restructuring of the program, we decommissioned 26 applications, but added an additional 35 that had not been previously identified. What we are doing is reviewing application functionality, resulting in the creation of 19 programs of work, accounting for 259 applications. We have been performing detailed functional analysis to determine if applications fit in specific programs. To date, 45% of the applications reviewed have been found to belong in their program and 14% have not. We continue to evaluate the remainder as we build out the projects for rationalization within programs. Yes, I got it. This slide shows the breakout of applications by programs and the structured process put in place to ensure that we focus on the programs that provide the highest return on investment in the shortest period of time. While performing this work and many other projects, as well as the day-to-day support required from any IT organization, MTA IT continues to drive for savings. Since 2015, MTA IT has reduced both its labor and non-labor budget year after year. The combined savings due to position reductions or non-labor efficiencies has resulted in $181 million in savings. The labor savings is a result of the permanent elimination of 187 positions. With this and MTA IT's recurring operating and cap-op non-labor savings, the result accounts for $634 million in savings from 2015 to 2025 per our forecast. That ends my presentation. Are there any questions?
Sorry, to brief the committee on the status of open audit recommendations previously accepted by the agencies and audit reports issued by MTA Audit Services.
Okay. Pursuant to the direction of this committee, we have prepared a report on page 595 of your committee book, where we are reporting that there are currently 2 open audit recommendations that have exceeded their original implementation date by more than 6 months. There are representatives from both Metro North and procurement here to answer any questions that you may have regarding those 2 items.
The first question I would have is there a reason why the delay in dealing with those open audit recommendations? Or more specifically, what is the reason?
Good morning, I'm Nate Gilbertson, Director of Corporate Compliance and Strategic Initiatives at Metro North, and I've got Glenn Hayden, our Vice President of Engineering, who's going to answer the question on the first recommendation.
So the first recommendation was to tighten up controls on track conditions discovered under visual track inspections. Our initial intent was to use EAM systems to take care of this. That has not happened. So what we have done is a twofold strategy to address this. We have an internal compliance department of 3 positions who monitor all track inspections, make sure that they're done per FRA requirements, and manually track those items. And secondly, in absence of full EAM, we have created an MW trouble desk that is based upon an access database. So it is not EAM, but it is configured so that when EAM comes along, it can be loaded into Infor product. So our MW trouble desk now closely monitors these items, and any condition that requires it will generate a trouble ticket, and we can then monitor progress, how long it has taken, resources that are required to mitigate the condition, and the closeout.
Are you confident that the steps you are taking will, 1, close this out promptly, and 2, avoid delays in implementing audit findings in the future?
Yes, sir.
Next. Thank you.
Thank you, Mr. Chairman. And I'll add for the sleep apnea item, though we're technically not in compliance with the audit recommendation, we actually did get to the board last January 2017, with recommendations of awards that the board approved with 3 companies to provide services on sleep apnea. There were a number, since these were new contracts, there were a lot of scope issues that needed to be worked out, and pricing was left to be negotiated after the board meetings. But we did give notices to proceed to both companies, and they have been providing services since. So it's not like services have not been provided. We're finalizing the contracts right now and expect to have them done by the end of this month. So services have been provided to hundreds of employees already through the services of the 3 companies that they choose from, and we'll be finalizing those contracts this month.
Ms. Feinberg has a question.
I think he answered the question. I was just going to ask if this had delayed the testing and diagnoses of sleep apnea under.
The services have been provided, so no delay.
Okay. If there's nothing else, thank you. Now I'll need a motion to go into executive session to discuss the claims and litigation matters and security of sensitive data at the MTA. Have a motion, second. We are in executive session. Thank you. Of executive session, may I have a motion to adjourn the audit committee? Second, all in favor. Audit is adjourned. Thank you.